Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to continue our coverage of the Bitcoin dump, the crypto dump, as of course the market in general, including all of the stock indices, are basically taking profits. They're having a bit of a turnaround. Whether that's going to be a continuation of a macro downtrend, we'll have to wait several weeks to actually find that out. But in the meantime, we are just watching a sea of red appear on the board. And however, while Bitcoin has found a little bit of support, some coins are popping off. This should not be taken for granted. And as you know, the motto of this channel, right? Always be selling, always be taking your profits, right? Put food on your table. You don't need to be collecting all of these coins. Just target maybe a couple that you're interested in, really learn their charts, try to take profit as often as you can, and then buy back on 15 to 20% retraces if at all possible. And if not, just remember there are always other coins having pullbacks that you can get into. This is a trading channel. As for hodling, of course, we are in the neighborhood of a pretty good area to start hodling. That's not my financial advice at all. In fact, I'm not a hodler. So I have no idea how low this chart can go. Of course, I've presented many ideas to you guys. Personally, I feel that 8,000 is probably the reasonable low in terms of an extreme low. However, some people do hypothesize anywhere from $1,000 to $5,000, and I do understand the case for that. I won't make that case because I'm not convinced that that will happen. However, if we do get macro cycle kind of retracements on the stock market, those type of like 70-year and 7-year cycles that we see, then of course, anything is possible, and this market could fully retrace. This crypto market could fully retrace, and a lot of people will be shocked. And that's just going to open the doors for a huge wave of new investors, as all the old investors from the origin of these cryptos will basically have been pushed out of the market. And we can already see that as probably the majority of holders, and I know the majority of Bitcoin holders are underwater. So, this is how the market cleans itself. This is how the market gets rid of all that exuberance. And often it's preceded, or rather, it goes along with, choppiness to the side for approximately a year, right? So if we see a year of just sideways action at whatever level we fall at, don't be too surprised, right? I'm giving you the heads up on that because these markets tend to want to wait until everybody is basically forced to sell. And then only when the last guys are being forced to sell and the only people remaining are the ones who would hodl no matter what, then the market starts, suddenly skyrocketing again, right? That's just how it works. So these things might have been on, might be on accelerated, courses due to the way that information is spread these days. This certainly was just just a bear market downturn. And could we have a very speedy recovery that goes along with how quickly people are sharing information these days, as opposed to like 50 years ago, right? Even 20 years ago, there were no resources in the stock market or any of these things. You had to really like wait to read the newspaper or something. And so, of course, there's always the possibility that those timelines are shortening. The tighter and tighter the crypto community becomes, maybe we find our low and then we recover faster. But in general, you can probably just bet on, an extended bear market, especially as stocks go down. Let's go ahead and just put some things on the chart to see what we're looking at. Of course, we did have this rising wedge that went along with falling volume. So just to share where we've been, this is what I've been looking at for the last couple weeks with you guys, as well as those pumps and volatility where we just had some real extremes on the chart, and we've been following the 4-hour volatility extreme from back here, which gave us nice pumps. Then we followed the 8-hour volatility, which often was preceded by a couple fake outs. We got those fake outs, and then, of course, we proceeded to the downside, which is very typical of that 8-hour volatility. And now the daily volatility is taking over. And of course, we're not 100% sure where the daily volatility will take us, but it does appear to be pushing us to the downside. And that's very likely to continue in that direction until the volatility has fully, basically maxed out its chart. And what you can see here is that we're only about halfway through, right? You can see the EMA on the volatility, and then you can see the actual volatility ribbon, just average where these two are, and it's approximately in the middle of this, indicators chart here. And so what we would like to see is it at least getting up into this red zone since we have crossed to the middle of the chart. And if we start turning around, in this type of area or even max out, then we could, and then the EMA basically comes to across the ribbon, then we can consider that the move is over. But since the move has initiated to the downside, it's likely to continue to the downside, especially as our Stokes continues to be pointed down, and that's down not only on the 24/7 exchanges, but let's just pop over to the CME professional exchanges, and you can see, yes, also quite pointed down there. So, we're really going to have to get above 24,500, and then on the 24/7 exchanges, we'd probably need to get above 23,200 in order to change the direction of our contraction on these volatility indicators, and that's just not likely to happen, as most likely this move would have a corrective measure, maybe up to 23,000, maybe 22 to 23,000, just in my estimate, just by how these moves tend to play out, especially as we have other factors that may be working against us. And so if we do go to a lower time frame, we can see that the measured move of this rising wedge, of course, there is a little bit of differences in opinions on what the measured move of this should be. A lot of people just take the width back here on the wedge, but depending on where it started, you see this wick right here is actually perfectly on trend with the rest of the wedge. And so some people want to take the measured move down to here. I'm not really on board with that. Personally, I believe it should be measured from the bottom of the first valley. And look, we actually hit perfectly to the bottom of the first valley. If you are taking the length of this on a diagonal, then that would bring us to approximately 20,000, and that's also a reasonable target, especially as this is a bearish pattern. And that we found support here may be a little bit of a coincidence rather than the measured move. Of course, these are two different styles. There are different traders who have built up different statistics. And so, again, I'm trying to use statistics based trading. I'm not trying to just pull these things, out of my, just my imagination alone. And of course, there was a 70% chance of breaking down once we had these 5 points put in place and had that pretty hard rejection up here. And so we did recommend the short position. We did recommend to just get out of long positions here rather than going long from that place, because why bet against a 70% chance of a likely breakdown? That's not very good odds in trading if you wanted to go long. But we did have that breakdown. The measured move is approximately 20,000. We basically are finding support in this area where we had basically this this daily over here. If we jump over to the weekly, you can see something interesting on the EMAs, which is that we also have our 300 weekly EMA right there. And so just like we were finding support on the 200 MA right over here, we've now found support on the 300 EMA. And so these EMAs can act as support and resistance. Of course, they are merely reflective of price action, but it's just a good way of seeing how support and resistance is developing on the charts when you take a look at these things. Additionally, this is, of course, a 21 and a 20 MA, so 21 EMA and 20 MA up here. But effectively, we have the Alpha 9 knockout where we're having a bullish cross on the weekly of the 20s. You can see they're about to cross over, and price action just dropped, approximately 20%. And whenever we have these major crosses on price action, as I've mentioned, we often find ourselves with 10 to 20% drops. Here we have a 15% drop right where we had that alpha 9 knockout, that real 9, the 9 EMA and the 10 MA right here. They crossed over bullishly, and we had a 10 to 20% retrace. You're seeing the exact same thing with this bullish cross. The only difference is both of these EMAs are pointed severely negative, whereas we did have a slowing of the cross of the 9 EMA, which kind of pulled price action up. This dramatic down angle on these 21 and 20 moving averages suggest to me a possible push further to the downside, especially when you consider that we've closed underneath the 4 or 5 EMA here, and we are threatening to close below the 10 MA, which would be very bearish if we did have a daily close here. So we have 7 hours to kind of get this candle back in order, and it seems pretty unlikely that we're going to do that. If we close under, again, that $23,000 area, there's not much of a chance of recovering this. You can see that the 200 MA, this really thin orange line, is right here in the $23,000 area. So that is something which we should be aware of in terms of if we're targeting a certain number, like getting on top of the 200 weekly MA is really, really important. And we just haven't been able to hold it. We did have that breakdown, that massive breakdown. Just going to fiddle with my settings here a little bit. I like to try to distinguish these lines a bit. Okay, and let's see. And then if we do have a breakdown from the 300 EMA on the weekly, then of course we also have the 300 MA down here around 17,250. And as I've been pointing out on a few of our previous episodes, that if we make a lower low, right, and the 300 MA moving average, simple moving average, would be a natural place to kind of take a pause at. If we do end up falling to the 300 MA at 17,250, while it may not seem like a, typical place you might think about where price action would stop, these MAs do tend to act as support and resistance again. You can quite clearly see that in the interaction over here, and that would give us a lower low, but that could also give us a higher low on the RSI, which means we wouldn't dip as low as this previous low, and so that would give us bullish divergence on the weekly, and that bullish divergence on the weekly is what could perhaps take us into a higher level. It could give us fuel, like kind of rocket fuel for kind of a pump. And so, guys, we kind of hope that we can get down to this 300 MA. I mean, at least that's my opinion. I haven't really heard anyone else talking about this, but I personally think, as a EMA's trader, that if we were able to catch support on the 300 MA, sort of the way that we're catching support on the 300 EMA up here, and how we had held the 200 MA up here for quite a number of weeks, right, almost a month or more, then we could get a nice bounce off of that with bullish divergence on the RSI, and that could perhaps even give us that second chance to try to grab those levels at 28 or whatnot, all these greedy levels that people, were kind of getting suckered into as they saw, the low hanging fruit up here, and then the market, of course, just shoved us down. But we do have to figure out whether or not we are going to hold this level. Right now, many people are talking about us as potentially having double bottomed. You see this bottom and this bottom. Maybe there was kind of a double bottom and we could just go. I mean, that's possible, but it's just unlikely for the reasons that I showed you related to volatility. However, if we do get over $23,000 very quickly on the professional exchanges, and then on Monday or Tuesday get over $24,500 on the CME, then of course I would be open-minded to that. How could I be against that, right? But do I think it's likely in our current setup, in our current positioning, the way that stocks look like they're about to drop off a cliff? No, I wouldn't be betting on that. And so people who are betting on long positions right now, they're probably going to get wrecked. And what I've been warning is that we were going to, of course, have that drop off. And so I hope you guys took those warnings. The warnings that I give, of course, are not financial advice. But, if any of my friends are able to benefit from, how I'm trying to improve myself as a trader, then I hope you were able to take that, advice to heart, just personally on a personal level, but not financially. Let's see. Of course, we did also have the USDT wedge that we had been talking about for quite a while. There's just some controversy about where it should be lining up because. Whether or not you believe this is a beautiful technical falling wedge, personally, I think the rising wedge on Bitcoin is much more beautiful. I mean, if you look at the technical construction of this rising wedge, I mean, it is just textbook perfect. Like, I'm seeing people like drawing these, like diagonal channels on Bitcoin when there was a very, very obvious rising wedge. Or, it could have been an accumulation wedge, but, it ended up being a rising wedge. And so that rising wedge just is so technically perfect that this could be part of a class. This could be part of a textbook. And I'm really sad for any trader who missed this pattern because it's so glaringly obvious, and that's why we just had to warn the community to get out. But on USDT, we had something very similar, which had confluence with it. And once Bitcoin hit a certain location on its rising wedge, then when we saw that USDT actually was finding support above its mid channel and gravitating and kind of hanging on to that upper resistance on its falling wedge, it was almost guaranteed this thing was just going to just explode to the upside. And so, of course, we were also warning about that one. Originally, I had some hopium that we could stay in this kind of lower level. Maybe it's a fake out. Maybe we chop down until 5.33% down here. But that just wasn't meant to be. And also Bitcoin's rising wedge could have been an accumulation wedge. So we had to be open-minded to the upside. But of course, very clearly, the warning was to the downside and the risk ratio was heavily to the downside with that 70% likelihood. So while that's where we've been and the targets that we could possibly see based upon those formations, and then also an explanation for why we're getting some pretty good support where we're getting, right? Of course, not only that it was previous support, but we also have the 300 weekly EMA right underneath our feet, right? We do have the possibility for a bounce. And so, of course, I've also given you those targets. I do need to move these levels just to accommodate those. And let's just keep that one at 24,500 because that's still pretty much the number that we need to beat to, get back to our old bullishness. And then if we beat 23,000, that's going to be a very good sign, but just not the definitive, answer. More likely, we're just going to be bouncing to this $22,000 area. Maybe we could get as high as 23, and then probably some type of rejection and continuation to the downside, so long as that volatility is holding up on Bitcoin. One thing that we should be looking for, other than perhaps a lower target at the 300 weekly MA simple moving average, down at 17,250, is that of course we do also have some other formations, such as this kind of basically this kind of bear flag. I mean, I don't know if this actually qualifies as a bear flag anymore. I guess it does. I mean, maybe there's not a limitation on how long this can get, but you can see this thing is wider than it is tall. But if we did drop off of a cliff because of this bear flag, then our target here would be somewhere between 14,000 and $11,500. Not sure where to exactly, measure this kind of weird kind of like U shape right here, maybe from here, maybe from the breakdown right here. So anyway, I'm just saying 14,000 to 11 and a half. And so that kind of $12,500 area is pretty reasonable to target if you do think we're going to be breaking down from that bear flag. And of course, there is some confluence with support. You can see this support, support, support in that 11,500. You also see some candles kind of bouncing around here in a 14,000. You see the kind of like peak right here. There's a little bit of a chop right here, not much. We could easily just drop down to the middle of this range or to the bottom of that range and just cut through it like a hot knife through butter. There's also a bit of support at 16,000-ish, so that's also a place that we could consider. And as for that 17,000 250 number that I've been talking about for the 300 MA, there's not really much there to go by. So in terms of finding some random support in the price action, not really sure. The only thing we have going for us is really that 300 weekly MA. But the 300 weekly MA is a number that professional traders do like to target as bottoms of markets. So if there was a chance to bounce, before these lower numbers at like a 14,000 to 10,000, then of course we would want to just be open-minded to the possibility of, capturing the 300 weekly MA and then putting in that bullish divergence. So, guys, I think I want to just go over a couple more things. Um, which is basically that we're in a pretty bad spot on stocks, right? So you guys probably heard that Michael Burry, the big short guy, who is pretty famous for shorting the market at really key points, basically sold everything, and so that suggests he's super bearish right now. So the big short guy is short even at the bottom of the market. Does that suggest that there's way more to go than what we even thought? Well, if you look over at the stock market, you can see what's happening on stocks is that basically we've had a huge pump. We've basically recovered 50% of our drop, and typically, bear markets don't continue when you recover 50% of a drop. You actually entered a bull run here, not a bull market per se, but you've entered a bull run, and we're just having a pullback. And a lot of people believe that we could just continue on our way to the upside after perhaps a healthy pullback and not make a new low. So, why is Michael Burry selling everything and warning people that we are going to have a devastating economy or whatnot? And it's because, a lot of people are starting to do analyses on these different, like 7 year and 70-year trends on the on the S&P and on these other things, which might suggest that we're going to do a full retracement, perhaps down here to even this 2000 to to 1500 area, like basically 1700 area of the S&P 500, and that would be just so devastating. That could bring crypto basically to zero because of the ratios that are at play here. And I'm not sure, guys. Like the case that a lot of these guys are making is actually pretty good. I can't deny that we do have those type of historical patterns, which do take us on 7 year whirlwind trips to the downside, and then we have just very long macro patterns that do take us all the way across the channel, and we haven't fully crossed our channel yet. In order to get there, we would have to do some pretty incredible drops. So I'm not going to project these ultra low areas unless we have a global financial crisis. But you look at what's happening in Russia, you look at what's happening in Ukraine, you look what's happening in Europe, you look what's happening in Japan and in China, and then you look at how fragile things are getting in the United States, even though we've been holding up pretty much as one of the strongest. Um, you see the hyperinflation in Turkey. I mean, guys, what are we seeing except for the building of a global financial crisis? And if you start having to reprice stocks according to a global financial crisis, then the levels that we could see, of course, are at least down in these areas. I mean, we have to be open minded to some pretty scary numbers. And as I've marked out before, it is actually technically possible that we could end up just having a major, major crash to one of these bottom lines. And while, again, I'm not calling that, I think we would probably catch ourselves in this area or perhaps this area up here in those worst cases. Um, you also have to be open minded to the upside, right? Which is that we maybe are just out of this particular downturn, and maybe we're just going to break out of our bear trend. But until we convincingly break out of this bear trend, there is the risk of just continuing to the downside. And you can see what happens. These can be pretty sharp drops, and one more sharp drop like that to just wipe out everybody and start over again, it's not unheard of. It happens time and time again in these markets. And so that's the scary stuff that people are very worried about. That's why you don't see buyers stepping into the market. Um, you know, even if we do look at this, the S&P here, and just forget about the macro stuff, we are going to be having some type of retracement, probably to this daily 200. It's right there in the same location as the daily 21. And so if we did pull back to 4180, maybe even 40, 70, just kind of in this area, that would be a pretty reasonable pullback. That would actually be a bullish pullback, and we could see if we could where we could go from there. If we did retrace this whole move, sort of like what we did here and what we did here, then that would also not be unusual for a 5 kind of Elliott wave kind of move, which maybe ends in a double bottom or in a lower low. Perhaps the bear market continues, in which case we would be talking about probably that 3,900 to 3825-ish, right, area. So these boxes that I've marked out, and those would still be overall bullish because we could make at least a higher low here, and here we would just make a very bullish higher low. Unless it turns into one of these hooks that kind of just falls down right afterwards, right? But anyway, we are in that kind of retrace zone, and while we've basically retraced to the 21, right, on the daily, we did close under it, and so probably we're going to squeeze a little bit lower, at least to the 21, to this 200. And again, if that ends up being a squeeze play to the downside, you could get to the 50 or the 89. And if it's just terrible, then of course we have some support in this area that we've built up. Let's see, going over to the Dow Jones. Of course, the Dow Jones looks even worse, right? We've got this kind of like a shooting star. Um, I think some people call it a gravestone doji. That's a shooting star. I think they're basically the same thing, shooting star and gravestone doji, right? But the gravestone doji tends to be really close to the bottom, so it's like only the part that's sticking up, like that's the gravestone, right? Like you buried someone, right? And the gravestone is the only thing that you see. You don't see anything below. And so this is kind of a shooting star kind of gravestone candle right here, and those do indicate just a massive turnaround on the charts. So again, if we're seeing that on the Dow Jones, and the Dow Jones had broken its bear trend, then that was just kind of a classic fake out, right? It was a classic fake out in the market, and probably we could see a retracement again to this area right over here. Very similar to the S&P, if not further down. Okay, so sorry, I haven't recolored these things, but you can understand that we can retrace to these areas quite easily. And just for the time being, just going to get rid of this one. There we go. So maybe we could talk about this area down here as well as this green box. Let's see. Then if we check out the NAS 100, right, which is kind of like tech heavy, section of the Nasdaq, then we can see just a very similar thing going on here. Sorry, I seem to have a lot going on in my charts. So probably can delete that thing. Delete that. And, we do have our macro channel. And then, of course, there are potential targets to the downside if we do take that trip to the downside. But one thing that I probably want to point out is that on the daily, on the NAS 100, while we don't seem to have the same setup as the Dow or the S&P, we have our 200 EMA over our head now. So both the 300 and the 200 are over our head, and so that's not really the the best look, right? I mean, if we could squeeze through that, we could get a huge pump, right? If we can squeeze to the upside, but we're losing it and we're now turning it into kind of resistance potentially, right? So what do we want to see is, do we turn that 200 into resistance, or can we get some type of squeeze play to the upside on it that could be quite powerful, either as a rejection or as a squeeze to the upside. So just something to watch out for. Um, Personally, I think that the NAS 100 is still broken out of its downtrend. This is just the log chart, but on the simple linear chart, it has broken out of its downtrend here, and now we're just testing it. We're just testing it kind of bullishly, in fact. And so if we did get a little bounce in this area, and continued to go, that would be a very bullish sign, at least for me. However, if we break down into this area, or worse, come down to this area, then most likely we're still in our bear trend and probably going to continue lower, in my opinion, right? And what could drive that? What could drive the Dow just breaking back down into its bear trend? Well, I think probably Apple. I think probably Apple. Let's just pull up Apple's chart. If we look at Apple on the daily, it doesn't look too weird or anything like that. But I think if we pop over, if we pop over to the weekly, we can see, oh yeah, that's a gravestone doji. Okay, like there is nothing underneath where it closed, right? You only have the gravestone, right? So this one is quite dead. Like this is we were looking at a shooting star on some of the other indices that we were looking at, but looking at the Apple stock, we just see a gravestone doji. This thing's dead, right? People are going to be taking massive profits most likely, so we could see a drop all the way down to 159, 157-ish, right? 150. And this would just be a huge retracement from the top of, it could be 15%, which is huge for stocks, okay? That's huge. And this would drag the entire NASDAQ down. Okay, so all those tech stocks, if Apple is coming down, this thing could drag the entire market down with it. I mean, I want to say maybe it could be a little bit of a fake out, kind of like this, kind of like hammer that we had over here, but that did continue down quite significantly. Even though we had a pop up right after it, like we could pop up, but most likely this is symbolizing the fact that we are likely to do a heavy retrace, and let's just see. Yeah, getting a little bit toppy there. So, it's not death yet, but definitely getting there. Yeah, like we've got actually a kind of a God mode warning for Apple on the daily that it's going to turn around. So, just it doesn't look too good for Apple right now. And if it doesn't look good for Apple, it doesn't look good for Nasdaq. And if it doesn't look good for Nasdaq, it doesn't look good for Bitcoin. If it doesn't look good for Bitcoin, it doesn't look good for the rest of the crypto market. Okay, that's how it works. That's the order of operations there. And then, of course, we also have, the US dollar just skyrocketing. We do want to see what the current situation is. Look, it's just, this was a massive fake out. I mean, this was a check back basically to the 20 EMA effectively, right? Kind of where this 89 on the daily is. But it basically just checked back to the 20 on the weekly. And of course, I use the 21, but this was basically just a check back to the 20 weekly EMA, which is quite typical. And then you see this just huge engulfing candle just violating all of the breakdown that we were making. Hopefully, the one saving grace that we could have is that, you know, is that this growth curve that I have marked out here and that we've been following for quite some time, it's been extremely real, right? This growth curve, perhaps it could cause us to be, pardon me, perhaps it could act as resistance as it has acted as support previously. So once we hit this 108 area, maybe it's going to act as resistance, and perhaps we could have a little bit of a good trading unless it just decides to continue to be bullish and then get up to like perhaps even 115. And this would just kill the stock market. This would just kill crypto. Okay. So the dollar is really what's tearing us a new one right now. You can see we had this trend, right? Which it had broken down from, but it was a massive fake out. And then we also had our growth curve, which it broke down from, and it's retesting the underside. What did I tell you about these growth curves? Usually, when there's a breakdown, the price action will test the growth curve on the bottom side, sometimes higher than the price on the upside, and that's exactly what's happening. We have reached a price that's above this previous price action, but the cool thing about it is that oftentimes these, that type of retrace actually symbolizes a turnaround. And so if the dollar did turn around, having broken down from the growth curve and then checked back at a higher candle close than the previous candle close, I don't know what it is about these growth curves, but that's what tends to happen, okay? Like that's how it tends to turn around. In the majority of cases that I've seen, maybe that's not a hard rule, but in the majority of cases that I've seen, that's what happens when there is a turnaround. It doesn't have to turn around, so it could do what I said and just use this this breakdown area as support and just go to 114. But we still have a chance, guys, okay? We still have a chance. We're still running into this growth curve, potential resistance. We still have this kind of horizontal resistance from, well, there's older charts of the DXY. And so, just like we got limited in this area before, we could get limited in it again, make a little bit of a double top. But personally, I think that if you look at the macro, it's likely that this chart is going to continue bullish. So we have to be aware and we have to prepare ourselves for the possibility of this happening, okay? Which would be very bad for the market. Go over to the VIX. We just got our toe into the like heavenly waters of trading, the most beautiful, just the best trading experience that you could have is inside of this kind of, just heavenly zone that I've marked out for us. And of course, we lost it. Of course, we lost it. So get rid of my arrow. We're now up here and we're testing the underside of this wedge that we put in. Are we going to break back into it and get back into these kind of like hellish conditions where just everything dies? Maybe, but we're still in an okay area, so I can't be too bearish until, the VIX really starts popping up. Um, you can see that Bitcoin hasn't dropped to hell, right? Stocks haven't dropped to hell or anything like that. They're still in this pretty good zone, right? Even as the dollar skyrockets, and which is putting the brakes on the charts, we're still having a pretty good volatility for trading in the stock market. So we're just going to keep watching these factors. These factors do add up, and that is really important for consideration of how we might move forward. You know what? I wanted to introduce the market breadth to you guys, but I think I'll do that in another episode. This episode has already gotten pretty long. You guys understand that there is the possibility that we hold on to some of this support due to the 300 weekly EMA, right? The EMA. And if that 300 EMA, weekly EMA, just continues to offer support, and we have a little bit of a double bottom right there, and if we can get above 23,000 and then quickly take out 24,500, then this run could still be back on. But if we lose this area and we actually hit you know, the measured move of that breakdown to like 20K, or maybe even drop down to 19K ish, right? We could see further down, especially as our momentum is completely lost and as our volatility is pointed dramatically to the downside. Let's see. Ultimately, if we were able to get super low, I have a list here of where I would like to see price action go. It doesn't mean that I think it's going to go. This is like when you're super greedy, right? You're super greedy at the top. This is where I'd be super greedy at the bottom. And if I was going to be super greedy, then I would be targeting this kind of $10,000 area where there's this kind of CME gap just underneath there, or this that Binance scam wick, right? That hit around $8,000 ish. So, you know, that's an interesting area to be looking at for me if we do end up continuing to the downside. Otherwise, you guys understand, we have a pretty good support area, 14,000 to 11,000, and then we have the 300 weekly MA at that 17,000, 250-ish area. Just want to double check that really quick. Yeah, 7,000. Well, 17,500. I guess that would end up being a double bottom. But if we wicked below it, sort of like we wicked below this one, then that could also just catch us on the kind of recoil, the kind of rebounds that we might get after kind of that scary fall. Guys, gonna wrap it up there. That was your alpha for the day. Stay safe and happy trading.